I just literally am in the car because I just arrived home from the open house. You can literally see my flags in my backpack right here. I got the signs in the trunk too. And yeah, man, I'm just hustling. So I wanted to show you, I owe you guys a explanation of how I was able to catch a $31 move on Tesla. None of you guys voted that you didn't want it, so it's coming out right now. Obviously, I'm going to keep it super quick. So right here on the daily chart, I always love the daily. I literally am just identifying the gap. I just know that Tesla's falling, and my whole job right now, as it was falling just a few days ago, is to find out exactly when it's most likely to stop falling. I have no idea when a stock is going to magically stop falling. I'm literally just looking at the chart like the rest of you guys can. And I teach this in the school. Right here at the bottom was that gap at the around, I want to say 218 to 220 level. When the stock fell to 220 on that day, I realized it was an extreme buy, okay? And this is part of the section of my book that I wrote for you guys. It's totally free. Check out the website, maestro.com, for it. It's just because of the candlesticks, and that's one of the whole ideas. I explained this in the YouTube video I made too. That's also for free. You can check that out on the YouTube channel. But right around here, the stock really pushed down on the 10th of March. Then it decided the next day to make an indecision candle, but the day before that, when it hit my 220 level, I started a position. That's how I start positions, is when the stock is hitting my level, I'm waiting obviously to see if it just dives right through it. If it doesn't and actually closes the day, because I'm a swing trader, I wait for the end of the day every day. If it closes that day at that bottom, or at least very close to it, or show me any kind of signs of buying, I will start a position just because it's in my zone. Then the next day was followed with an indecision candle on the daily, which gives me the most likely idea for reversal. Why? Because the sellers was just so strong on the 10th, and then on the 11th right here, they're struggling, and the buyers are showing a green candle after the gap close in the demand zone. And let me get to the demand zone real quick before I finish this explanation off. The demand zone comes from all the way from 2021 right here. I'm just literally going to draw the whole entire zone. So right, I would say the most accurate way to draw it is right there. And I'm just drawing it there because I noticed these wicks right here, along with the bottoms and the closes and opens of these two candlesticks right here, showing me that anytime it goes under, what's this gap, 225 to 210 area, it's most likely going to get bought. And when we just dropped from all-time high 488, 488.54 all the way down to 218, 220, I saw Tesla under 220, where I literally just bought it right before the whole election thing happened, and it exploded out of this 4 or 5 year trend downwards and sideways. I would call it honestly a consolidation. Before this explosion, that is so bullish. And then coming back down, I can't even believe we got that price again. But when it came down, I just used my few confluences. Check out the book, check out maestro.com, the whole entire, to actually be inside of the group, it's literally $40 a month right now for you guys. That's half off of the $80 a month it's going to go back up to in about a month. So make sure you guys take advantage, jump on there, and I hope this explanation was a little bit helpful. I could obviously get into way more nitty-gritty with the behind the scenes stuff, like the news and the whole entire situation with the company itself. And the market's another thing. I mean, I didn't even really talk about the market technically falling out of the sky there. But, you know, if I went to SPY, we've got a giant red candle. You could have seen this coming from months ago. This was very obviously going to happen, and I think one of the biggest reasons why I thought it was going to come down was just because Microsoft had very bearish price action right up top. If you know Microsoft, it's just up there with Apple. It's like the second most valuable company on earth right now. So love it, easy, and I literally just wait for the market to give me opportunities, and then I don't get in early. Unless it's with just like a couple share starter position. Even if you're trading options, literally just don't enter with your fullest size right away. That's one thing a lot of you get wrong, is you just get full sized right away on your positions and you don't give the patience factor. The patience has nothing to do with your guys' trading, and I don't think that it's a long-term safe strategy just to like all in right away Instead, start with a little starter position and then slowly start increasing your size over time as the move is adjusting. Honestly, I'm going to be real with you. This is a pro tip. I've never in my 5 years of trading made more money than when I actually just followed the momentum upwards. What that means is, instead of just trying to catch like the bottom and just all-inning it and hoping it reverses and then it keeps on selling for you, in this case, like, I started with a starter position, but I didn't fully enter my larger position until I saw the indecision candle at the bottom. And so as this is starting to go up, yeah, like, I'm not in with like my full account size. Like, I'm never gonna do that on one trade, because it's just, I have the capital, first of all, to diversify, thank God. But that came from aggressively positioning myself in the markets anyway in the beginning of my trading career. So what I'm saying is, yeah, if you have a smaller account like 1 to 2K or even $500, you're most likely going to be in a tough position, and I would try to just stay away from options. Just make your money in your job or whatever, as whatever you do to make income. Try to get to at least $1,000 to $2,000, and then just start practicing and keep adding some money, maybe like 20% of your income that you make from your job into a trading account, and then just slowly keep on adding. But during that time, while you're waiting and not really trading aggressively, waiting versus trading there, you want to learn how the chart moves and how stocks move by just trading like 1 or 2 shares. That's going to take all the emotion out of your entire freak out when you're trying to trade and trade profitably. All you guys are trying to start with $500 and make 5K in like a day. Sure, it's possible, but is it realistic for a long-term strategy? Then let's say that you do that, then you're going to take your 5K and probably blow it on the next trade when you start getting really anxious and really ready to make a banger trade, quote unquote. And then boom, the only bang that's going to happen in that trading account is an explosion to the downside, and your whole account's going to blow up. And then I'm going to see you in the Discord later. I don't want to see you in the Discord after you blew your account. I want to see you in there learning how to get this right before you actually mess something up. So it's $40 a month. That's less than what you spend on Starbucks in a week. And I'll see you in there. Hope this was helpful.